And welcome to the Follower Academy webinar with me, David Jones, and Aondo Markets. If you're watching the recorded version of this, it was held live on Wednesday, the 6th of February at 7:30 in the evening. So we do this one a couple of times a week, and it's a different take on trading. You know, tonight is all about trying to identify other traders to follow on the Aondo platform, you know, who might fit your own particular style of trading. So rather than maybe trying to be the star striker yourself out there trading and picking where to buy and where to sell, you're trying to pick a team of traders who are effectively going to trade for you, with those trades being mirrored on your account. So we're going to cover a whole load of stuff this evening. It's Tuesday. Thank you for pointing that out. It's not Wednesday. It's Tuesday, the 6th of February, if you're watching the recording. So it's all about finding traders to copy. So that's what we're going to be looking at this evening. So I think that risk warning's been up for long enough. So we'll get into it. I'm not going to do loads on PowerPoint this evening. This is really for the structure of the evening to remind me what to talk about. We're going to spend as much time as possible actually doing it on a live account, on a real account, so you can see how it works, setting it all up. So how it works is, if you've ever traded yourself, if you've ever traded, I don't know, spread betting or CFDs or FX, you know, you pick where you want to buy, where you want to sell, you put a stop loss on, and you see how the trade works out. There are traders on the Aondo platform, and you could do this yourself if you wanted to, who make their track records publicly available. So you can see how XYZ trader has done over the last 12 months, for example, if they've been trading for 12 months. So you can see what they've traded, the P&L, all that sort of stuff. And you'll see all that as we go through it this evening. So the basic principles are to try and identify profitable traders. Then we want to build a portfolio of traders. You can have up to 5 traders that you follow. Managing the risk is very important. We'll do all that. And then how we actually monitor those positions. So let's get cracking. So identifying profitable traders. So what we're going to do, we're going to log on to Aondo's platform. We'll look at a ranking list, look at the different ways we can sort people's criteria, their data, such as their profit and loss, and then we'll drill down into that because there's a bit more to it than just who's profitable. So let's say we're looking for Aondo's platform, so we'll go into that. There we go. So we'll start right from the first page, right from the basics. Here we go. So we'll log in at the top. So I've got an account set up already. So we'll log in to WeTrade. So this is like the high level view of what's going on and where it's easy to see people's performance. So I've got an account with about 1,200 quid set up, I think. Let me just get in here. It always tries to put in the wrong password, Chrome, for some reason. So let's go. Here we go. So here's my account. So it's a real, actual live account. There's £1,235 in there. I'm not actually following anybody yet because I've cleared it all out for tonight to start from scratch. So let's go. Let's get started. So what we want is the rankings list. So this is really where we start from. It's in effect, you know, it's a league table of people who make their track records available to be viewed on Aondo. So what I'll do, let's look over the last 12 months and I'll sort it by P&L. Okay, so what we've got here, let me just switch that off for a second and I'll explain what I'm doing afterwards. So we'll sort by P&L. So the best performer over the last 12 months is this person called Giuseppe. So Giuseppe has turned in 132% return over the last 12 months. So that's more than doubled the account, which is a pretty impressive performance. Number 2 is the Venture, who has turned in just over 100%. So double the account there. And then Raul Bermudo, Peter Lloyd, I've just got a problem. I think there's a problem. A couple of people are having problems with, I think, the sound here. Just bear with me a second for a minute. I'm just going to try and adjust this microphone. Just hold on a sec. Okay, I'm back. Hopefully everyone can hear everything now. I don't know why that happens. You know, you use the same setup every week, and I don't know, the old technical glitch now and again. So what we've got here, I think a few people have joined. So what we've got here, we've only just started. So we've got what in effect is our league table of traders on the Aondo platform who make their track record available. So the best performer over the last 12 months, Giuseppe, 132%. The Venture, 100%. Then we have Raul Bermudo, 88. Peter Lloyd, 5757, 79%, and so it goes on. So these people make their track records available. We can see how profitable or not they've been. But the first filter I put in, at the moment we've picked up, you can see up here, 537 traders is what we've picked up. But even if someone is trading on a demo account on the Aondo platform, they can make their track record available. Now, my approach is, well, if I'm going to follow you with real money, my own real money, I want you to be trading with real money as well. So what I want to do, you don't have to do this, but it's what I do, is first of all, get rid of the people who are trading on a demo account. And you can see the ones with R next to their name, they're real money. So the top two are actually real money traders. But then we've got to go all the way down to here to find the next real money trader. So if I click on RMT up the top, it now it only shows me traders who are trading with real money. Okay, so I've got a list of people who are actually using their own cash to trade with. So let's just look at some of the headline numbers. So Giuseppe has got a P&L of 133% over the last year. So it's a good return. But of course, if you've ever done any trading yourself, you can take on massive levels of risk to double your account. So what we want is not someone taking on massive levels of risk, not somebody who loses for 10 months and then basically goes all or nothing on a coin flip in the last 2 months and ends up doubling their account. We want to try and have a smooth P&L. So the next thing to look at is the drawdown, the max drawdown. So how much of their money, of their profit, have they given back along the way when it's been when they've been trading? So this one here has given back just over a third of profit. So that might be a bit volatile for some. This one here, the Venture, has only given back 20% of profit. Positive down here has got a relatively low drawdown, smaller profit of course, but clearly taken on less risk. So has made 42% over the last 12 months, but only given back 13% along the way. So hopefully that makes sense. And you often see this. We do these webinars a couple of times a week. You will get people who've returned more than 100%, but normally there's a price to pay for that, and the price to pay is additional risk, additional volatility if you're following these people. So I think that these details are really important. And then the other thing, the last thing I look at, my background is technical analysis and charting. So what I want to see, hopefully, is a nice smooth P&L trend. So, they're okay. But this sort of thing here, you can see this one here, hopefully, real money trader has made 39%, but has given up along the way 38%. Okay, so pretty volatile, massive drawdown, pretty flat for most of the year, and just had a bit of a spike at the end. Someone else is saying the sound is playing up again. I'm really sorry about this. I'm going to swap the microphone over. Again, just give me a minute and let me swap this over and try and fix it finally. Okay, just stare at those P&L numbers for a bit and see if you've got any questions. And I'll probably come back in a minute. Right, let's see how that works. Normally, these things go incredibly smoothly, but clearly not. Tonight isn't my night. Okay, so we've got this. Let's take a look at Giuseppe in a bit more detail. Let's click on the top performer with real money. Let's take a look. Here we go. So now we've clicked on that person and we get their page. Okay, so we can get a load of information from here. Let's just go through it. First of all, they've been trading since April 2016. Okay, so on the face of it, that's a long track record. So their P&L is the orange. Okay, down here, the purple dashed line, that's the DAX. So to give you a relative performance. So, but underwater for a good time, up until what, Feb last year, only really started moving into profit. So there we've got a top-down view of how well or how badly they've done. Down here, there's a really important bit of information down here. So this person is a real money trader, but only a real money trader since June 2017. So even though they've been on the platform since April 2016, it was more than a year later where they started trading with real money. To be honest, it's done all right since then. But it's important to, if you're looking at a real money trader, let's see just how long they have been trading with real money. So down here we have a bit more information: volatility, number of trades done, winning trades versus losing trades, winning months. Perfectly realistic numbers there. I always get a bit worried if I see somebody who's got 99% of winning trades, because it can be a suggestion that maybe they're not willing to take a loss. Okay, but this one looks like a sensible trader. Real money trader since then, maximum drawdown, and so it goes on. And then this next bit for me is the other crucial one. Okay, their annual number is good, but what does it look like on a month-by-month basis? Because when I'm doing copy trading, what I want is somebody to try and maybe smooth out, you know, some of the month-to-month bumps, you know. So ideally, if they can be profitable every quarter, then that's great. You know, I'm not too worried about them being profitable every month, but as long as there's a reasonable trend of profit. And last year, look at the numbers from last year. I mean, there are definitely flattered by a couple of big months. January 28%, April 21%, big loss in December, down 13%, but overall up 145% for the year. This year, I bet a lot of people have been caught the last few days with this big sell-off we've seen in global stock markets, but 35% nearly in Jan, and down 10% for Feb so far. So volatile, but you know, quarter-on-quarter performance, it looks okay to me. And then if you want to, you can see stuff like, well, what do they trade? A lot of traders on here tend to trade the DAX. So I think it's nice to actually see someone who trades a mix. We've got 14% of trades euro, 12% on crude oil, a bit of pound US dollar, a bit of stocks in there as well, and some other stuff in there as well. Okay, so you can see a whole mix of how well they've done. There's other details, other risk metrics. What open positions has the trader got? We can scroll down and see where they're running their profits. What closed positions? I'm guessing lots of losses recently, yeah, as the markets fell. So we can get, you know, a lot of detail about what this trader is doing. Okay, and I think hopefully that's fairly self-explanatory. You know, we can see the big picture P&L, and then we can see it on a month-by-month basis, and then an asset class basis, that sort of thing. Okay, so hopefully that makes sense. Let me just jump in to my portfolio. I just want to see who I've got before I add someone in. Okay, let's take Barbara out for now, and then we'll come back and add somebody in. So let's just go back to that page. Hold on. Okay, let's go back to our rankings list. So let's go to what we were looking at, a year sorted by P&L. So that might be a person I'm interested in following. Let's click on this one here. This one looks a bit more erratic. Corbachus. Let's click on this one. Okay, so there, oh my words, I've got no idea what this one was up to in August, but I mean, to me, that's not a good trader to follow. All of the P&L was in this month here, whatever the person did in this month here, and has done nothing since August in terms of P&L since August. Okay, so okay, the headline figure looks good, but actually it was all on a, you know, what looks like some pretty, there we go, August there, and September, and then just a bit chop since then. I mean, so far this year, they're up 1.25%, which I think is maybe more than a lot of traders are, considering what the markets have done. But we can see a lot more detail, and again, scroll down. Let's say, though, I wanted to follow this person. This is what we're going to look at next, how we build up our portfolio. Okay, so what we want to do, if we find traders that we think are interesting, we want to start following them. So this is what we're going to do now. We're going to access the portfolio builder, set the risk levels per trader, and then get it actually up and running on a live account. Let's go back. So I will actually, because this is a new person and I know they're not in my portfolio, I'll chuck them in for the sake of tonight's example. So let's click on follow. Here we go. Due to a negative performance, your selected trader was downgraded. Okay, got a maximum drawdown. Okay, he's a bit of a risky one. Fine, I'll take him anyway. I'll put him in. So now I had 4 traders in there already. Edel Metal, DAX Call 3, Giuseppe, and Smarty Trader, and I've just added this one in. Okay, so there's my portfolio of 5 traders. You don't need to have 5, but I do. So I've got 5 traders in there. So what it does down here, it gives me an idealized version over the last year, how much would I've made, and more than 300%. If I completely replicated their performance following these traders over the last year, that's how much return I would have made. Unfortunately, of course, we can't go back in time and follow them all from a year ago. Okay, but that's it gives us an idea of what our P&L would look like. But there's a few more steps we need to do before we actually get these guys going. So let me take you through how you manage the risk, because how it works is when I start following these people and click down here, execute on live account, that's it, we're up and running. So if DAX Call decides to buy the Dow with a 100-point stop, the same trade will be done on my account automatically. And I must admit, it's a bit weird in the beginning. I've traded using spread betting and CFDs for probably 20 years now. but I've never had anybody else doing it for me. So it is a bit weird in the beginning to see these trades going through, but I'll show you now how you can manage the risk so it doesn't have to be too stressful. Let's go to DAX call 3. Do I need to run through anything on the PowerPoint slides? Managing risk, here we go. This is what we're going to do now. So we're going to go to settings. Let me just explain this. So if I've got 5 traders in my account, for any trader, I can dial up or down the level of risk. So let's say for DAX call 3, let's say DAX call 3 has got a £100,000 account, and let's say I've got a £2,000 account. DAX call 3 does a trade risking 1%, losing 1% of their account. So they do a trade where the stop loss means if it went wrong, they'd lose £1,000. Now, if I've only got a £2,000 account, it would be rather stupid for the trade to be done at that size on my account, because I'm losing half of my account if it goes wrong, whereas DAX call 3 is only losing 1% of his account. But it doesn't work like that, because the trade gets mirrored on your account at the same percentage level of risk. Okay, so the trade gets scaled back, if that makes sense, on your account, so you've got the same percentage risk. So if DAX call 3 with a 100 grand account, for example, does a trade where the stop loss means they would lose £1,000, 1%, then the trade is done on my account, the £2,000 account, at a size that means if it gets stopped out, I lose 1% of my £2,000. Okay, so it's done at a fraction of their size. So I hope that makes sense. And what I can do is, let's say I'm massively confident in this trader, I can bump the risk up. So I can bump it up to a level where if they're doing a trade where they're risking losing 2%, I can do the trade in this example here, what I've just done, I can bump it up to 3 times that level of risk on my account. Or if I'm not sure, I can bump it down to 0, but the smallest I can do is a quarter of their risk. So if they risk losing 1% of their account on a trade, on this setting here, I'm only risking losing a quarter of 1% on a trade. Okay, so hopefully that makes sense. So it doesn't mean my stop loss is no different to theirs. If they buy the Dow, wherever it is now, it could be anywhere. Let's say they buy the Dow at 24,000 with a stop loss at 23,700, 300 points away. The same trade will be done on my account, but the size of the trade, let's say they do the equivalent of £10 a point, the size of the trade will be scaled right down on my account to reflect a lower level of risk. And I think this is the best way to start, is to set, because I think it is odd in the beginning to have these trades going through, but set it at a tiny level of risk, so you don't need to take on masses of risk. I'll keep that one at 1. There we go. But this one down here, who's a little bit flaky, the one I just added, I will dial that one down to 0.25. There we go, confirm settings. So I can set for all these individual traders a level of risk I'm happy with. And typically, I just have it 1-to-1. If they're risking 2%, then do the trade on my account at 2% as well. I want to see it at half. Let's bump him up to 1. There we go. And there we go. Okay, so clearly that will affect my P&L. So now, because I've knocked this one down to a quarter of 1%, I would only have followed his trade over the last year much smaller. So it's not my P&L down a little bit. But assuming I'm happy with that, I'm happy with the traders, I've got money in the account, I'm ready to go. So I click on execute on live accounts, and there's another little warning screen. So what this is telling me now, clearly these are active traders. So if they're active traders, they'll have trades that are open already. So they'll say, do you want to mirror the trades that these people have open? And I never want to do that, because let's say Edel Metal went short the Dow yesterday when it was 500 points higher than it is now. The trade of being short the Dow will be done in my account, but clearly it will be done at wherever the Dow is trading today. I don't get yesterday's price. Okay, so for me, I've got no interest in copying their existing open positions. What I want to do is copy any new positions they open in the future. So I click on execute portfolio. That's it. We are done. So there's some contract expiry stuff there. We can ignore that. So there it is. There's my account. Current open positions, I have got none, because I've just started following these 5 traders, and until someone does a trade, it's not going to happen on my account. So someone needs to place a trade. There's my account balance, there's my P&L, and that's it. There's a couple more levels of risk control though. So I've got £1,235 in my account. What I can also do, you see this thing here, loss protection. So even though I might be happy risking all of that money, if I think, well, actually, I'm new to this, I'm happy to have that money in my account, but if my account balance falls to a number, let me say £850, so let's say loads of trades get done and I'm ending up running a loss of just under 400 quid, so my account has dropped to, £850, close everything out. So close any open trades, take the loss, and don't follow any more trades. Okay, so what this is, in effect, it's a financial stop loss on your account, if that makes sense. Okay, so I've got that in my account, that's my loss protection. If my account value drops to that, start getting me out of these trades, assuming the market is open. Okay, so that's that. And the final bit of the risk equation, with Aondo, you have what's known as negative balance protection. So again, if you've ever traded CFDs or spread betting or any sort of leveraged instruments in the past, you'll be familiar with the phrase losses can exceed your deposits. So you can put £1,000 in the account, but if over the weekend the Dow drops 2,000 points and you're £1 a point, you lose more than your initial deposit. You have to put up more money. With Aondo, they have this negative balance protection. So what it means is you can never lose more than what's in your account. So even if the market drops to zero, you won't lose more than what's in your account. So hopefully that all makes sense. So we've done all that, and that's it. We're there really. So we have the traders that we're following. These are some, I think from last time I ran this webinar, I was following a load of people and I closed the trades out before we started the webinar. But you can see the size of the trades because I've dialed the risk down on a lot of these people. You can see that the P&Ls are tiny. Look at like UK rolling. So bought 0. So I was mirroring Barbara there. We'll have a look at her because she was quite a good performer. I wonder what's happened. I was mirroring Barbara there. The trade was done on my account 0.04. So that's 4 pence a point on the FTSE. So it's very easy using that risk slider thing to set levels of risk that you're comfortable with. Okay, so now, and all I do when I'm following people, I just look at this page and I just want to have a quick look, maybe a couple of times a week. What's going on? What's the P&L look like? Has anything gone drastically wrong? Blah, 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 blah. That's it. Okay, we're going to dig into a bit more detail in a minute, but let's have a quick look at Barbara. Oh my word. I thought it'd be something disastrous. So clearly, Barbara has got absolutely clobbered in what's gone on. She was one of the top performers, which again is why it's a good idea to have a mix of a few. But Barbara, where's the number? February, down almost 80% in February. So yeah. Someone's asking a question about the hedging with Aondo. I'm not sure of the ins and outs of how it works. I'm assuming they work like any other spread betting or CFD company, but I'm not sure of the answer. Aondo would be your best point of call for the answer to that question. So Barbara's clearly got clobbered. Last year, made 100%, nearly 99%, but has been absolutely chopped. So we'll look at the details, and it's with the markets falling just over the last few days. Dear me, that's very poor risk management. Anyway, let's get back to my account. So £1,236 in there, still waiting for a trade to go through. No trade has gone through yet. The other bit to the Aondo platform is this thing called Trade Hub. So let me open up Trade Hub. So Trade Hub, again, if you've sort of traded yourself before, you'll be more familiar maybe with what this looks like. So this is your typical trading platform. So let's just bring this up. So in effect with Aondo, there are two different platforms. And if you want to, of course, you can still do self-directed trading. So if you really want to do your own trading as well, you can do it directly on this platform. Let's have a quick look at what the Dow is doing this evening. Oh, it's all right. It's having a bit of a recovery. So this is social trading. So this is Trade Hub. So with Trade Hub, when you open an account, there are two parts to it. There's your self-directed spread betting account, which is this. So this has competitive spreads, all the usual stuff, all that sort of thing. Then if there's flip over to here, there's the social trading account. So there's my 1,235 quid balance. Okay, so this is where if I want to, I can go in, but there aren't any open positions yet. and I can see a bit more detail on open positions. Okay, and from Trade Hub, you can do the normal account stuff. You know, we can look at things like account history. So if I go back, let's go back a bit just to pick up that last webinar when I close them all out. There we go. So I can go back in my account history, have a look at trades that were closed out, and clearly, of course, you know, think that the trades get opened on their own by copying other people, and they get closed out when the other people close out their trades, okay, or where the stop loss gets hit. If you want to, you can interfere and go in to the trades that have been copied and alter the stop loss, for example. But it's important to understand, if you go in and do stuff like that, it won't be closed out when the person you're following closes out the trade. In effect, if you go in and tinker with the stop losses and the targets, it's your trade then. Hopefully that makes sense. So me, I don't tinker at all. You know, I've got an account for doing my own trading. This account for social trading just sits there and follows all the other people. So from Trade Hub, just to do a quick recap, where I've lost my point of the slides. You can adjust your positions if you want to. You can view account history, including financing costs, because of course we're trading using leverage here. There's a small financing cost every night. You can run account statements. You can add money into the account, all that sort of stuff. You can log in as we did. You get to see the usual key figures that if you've used a trading account at all before, how much cash you've got, what's your P&L, what does that make your account value, how much free margin do you have, all that sort of thing. You can change positions. We haven't got, we'll see if any gets opened in the next few minutes. I think we should be done in about 5 minutes time. We'll see if any get open. So you can go in and change positions, look at financing costs, and run your own account statements. Okay, so it's like a fully functional trading platform, and you have the two bits you can flip between. One for your own trading. For that one there, it's only got 46 quid in, and one for actually where the copy trades are getting done, but it's got the usual trading platform functionality. So if you want a bit more detail, you know, you can do it through that. Personally, for me, this has always been enough. I've been using this now since about May 2016, and I think I started off with a demo account. I think if you register with Aondo, you can start on a demo first of all, I think for 3 weeks or so, just to play around with it and see how it works. And I think in the first 3 weeks on the demo, copying other people, I made a 15% return, but it was at a real high level of volatility. So it was far too volatile. The account was swinging around all over the place, but it wasn't real money, so I didn't care. So I think when I'm following people with real money, you know, I try and dial the risk down a little bit. But I think the last week will have been difficult for a lot of people. I mean, Barbara, you can see there, completely blown up. But you know, it's because this turn in the markets has come so quickly. I think plenty of people have been caught on the back foot. You know, so maybe until we wait till markets calm down, maybe playing around with it with the demo is the way to do it. And then maybe in a few weeks' time, when things are a bit more sensible, we'll have a better view of who's managed to ride the storm. But for me, it all starts from this page here. You know, looking at the real money traders, who's got the smooth P&L. Let's see, are there any old names in there? DAX Call 3. I mean, this is somebody again who doesn't make 200% return a year, but we had a bit of a wobble in the summer last year, has been a real money trader since July 2016. So we've got over a year's worth of data from that one. The overall P&L, good smooth trend. Okay, so good smooth trend on the overall P&L. I think it's weird. Do you know, it's the same person who sounds dropping out. So Kevin, I think it might be a problem on your end. I think, assuming everyone else can hear me, but if they can't, they won't hear me saying this either. But I think it might be a problem with you, with your computer, not with you, obviously. But this is the DAX call is one I've always followed, because he or she has always had a smooth P&L. You know, we don't get, you know, the fantastic stellar returns, but it's interesting actually. Look at this, is interesting. I think this person has got, you know, what looks like from the face of it, from the monthly returns and everything else, quite a professional attitude to trading. You know, so last year, you know, we're not seeing 15, 18, 30% a month, but we're seeing nice steady profits ground out. Okay, a bit of a stellar month there in September, 12% return, 23% for the year. Year before, 31%. Year so far, this person's not down in February. I bet he or she is one of the few traders who aren't down in Feb. So far this year, so even though we're not delivering maybe the fireworks, I don't give a monkeys about having volatility if I'm copying people. I don't want volatility. I want hopefully a nice steady return. And if someone can sit there and make 2% a month, for me that's a great level of return. So that's who is it? DAX Call 3 might be an interesting one to follow. And maximum drawdown is tiny. You know, a maximum drawdown of 12%. So pretty small. So that's so even though it's not at the top of the leaderboard, I think it shows that maybe, you know, now and again it does pay to venture a bit further than the lead, a bit further than maybe the top 3 or 4. So there's a DAX Call 3. I think runs another strategy, DAX Call 2. So it hasn't done quite as well, that one. Bigger drawdown. And then high trades. Let's have a look at that one. And that one used to be, again, it was a star performer last year. Have they gone off? They've gone off the board a little bit more volatile. We can see there. But again, overall, you know, the overall trend still pretty good. Let's have a jump into our portfolio and see what's going on. See if we've got any trades that have been placed yet. And then we'll start wrapping things up. Unless there's any questions, we'll start wrapping things up there. Let's have a quick look. Ah, there we go. We've there the trade. Oh, and it's DAX Call 3 who's done the trade. The trader I was just singing the praises of has done the first trade in our account. So clearly they don't have access to the account. You know, I don't monitor the trades. They do. The trades get replicated on my account. So what have we got? German 30. So buying the DAX. Okay, so DAX Call 3 is calling the bottom. Units, you can see it's tiny. 0.03. Okay, so 3p a point. So I'm in at 12,600. The market's currently 12 points against me. I'm down 40p. Yeah, so you can see how I can set the level of risk to a level that I'm comfortable with. And if I go into Trade Hub, there we go. There's the trade. So there's the trade that's gone through. It's using up 400 quid of margin, presumably because the markets are, no, it's not £400 of margin, is it? Trade value, £403 exposure, £4 of margin because it's such a tiny trade. And there you go, 0.032 a point. So if I wanted to, I can go in and fiddle with this trade, change the stop loss, change the target, blah, 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 all that sort of stuff. But I'm not. I'm just going to leave it. And I can track the open P&L here or here in the top level view. Okay, I'm glad a trade went through actually before we finished off this evening, so you can see how it works. And that's it. You know, so any questions? Feel free to drop me an email. David@tradeafter.com will get to me. I did blog, and I need to do it again this year. I blogged about a real account about a year ago, over a few months, about putting money in and following traders with real money. And I'll do it again this year, and I keep saying that. But if you go to my website, I've got a feeling that link's not working. So if you go to jonesthemarkets.com and go to the blog, you should be able to read in there about my experiences with a real trader. It's not without its risks, you know, like anything, but I think there are ways you can manage the risk, dial it down, and you know, set it at a level that you're comfortable with. But I think it's an interesting way of gaining extra exposure to the markets and hopefully smoothing out some of the volatility along the way. But we'll start wrapping things up for this evening, so I'll let you get back to your evenings. Thanks very much for coming along. I think you'll get a link to the webinar, the recording, if you want to see anything again, if bits of the sound were dropping out for you anywhere along the way. But thanks for coming along. And that's it. Okay, enjoy your evenings.